Hey traders, Raghee here, and in this free recap video we're going to talk about crude oil. There was a pretty big drop in crude. Crude's down about 2% today, and the idea here is really twofold. Number one, certainly as the market's been rallying on the optimism surrounding what could be, although we have no confirmation of this yet, but what could be a slightly more accommodative FOMC going into the latter half of the year, there's a lot of optimism surrounding what that could mean for oil demand, and we can see what happened with oil. So fast forward to now what? Well, two things we've been looking at in the simpler futures room is one is the 52.20 to 55 even resistance zones that we would be willing to short crude into, because this would be then overbought, right? Overbought is what we look at for resistance, and in the contents of CHOP, which is what I think we're in right now, within the context of CHOP, with an overall bearish bias, because we have an idea of what? Some of you have heard this. Respect the trend that is, gang. You know, if we got to this CHOP from moving lower, then there's going to be a certain dominant psychology that says, hey, there's more bearish momentum behind this move. So, well, a lot of people focus on the near-term psychology of the bullishness. I still look at that at the scale of the downtrend and the scale of this recovery. And certainly I think most of you, when stepping back and looking at this action, say, yeah, the dominant psychology is still predominantly, again, bearish. It's the near-term bullish, longer-term bearish. So we look for the shorts, and that so far has been working really nice off that 52.20 area. Now, as we move lower, you know, partly what's interesting about the crude oil market is when you look at the Chinese data, there certainly is some weakness in that import-export data. In fact, we got that early on, and the markets going into the Asian close were quite weak. We actually did not see strength in the equities markets until we started to see the movement higher after about 7 a.m. Eastern. In other words, as the market started to turn to the U.S. session, we started seeing the markets higher after 7. And that's always pretty telling, because right now the world knows there's a slowdown. If not, we're at the precipice of a recession in Europe. We still have the uncertainty of Brexit, you know, brewing in the UK. And we have, of course, what's happening with the Chinese data. This is the second big hit. Last one was inflation. This time it's import-export. So out of Asia, and I would say from a data perspective, rightfully so, we see the weakness. But as soon as we hit the U.S., it seems that the narrative and the price action shifts. And the shift is due because of Powell, or as we call him in our chat room, Kapow, right? Kapow. We've got this movement higher since Friday before last on the expectation that this shift from tone and eventually in rates is going to come from the FOMC. So you can see how much optimism we've had in this market, and it's really in the face of what continues to be more and more evidence of a slowdown in China. So here is the juxtaposition for crude. You know, why does that matter? Because crude benefited from the optimism about increased oil demand on U.S.-China relationships getting better, and possibly now also maybe the U.S. avoiding recession by the FOMC hitting the pause button on the rates. Well, if we're getting data to the contrary, if we're getting data that China is in a slump, which, by the way, they are, this is why crude would come down, and this actually lined up very nicely with the overbought CHOP. So this is how we marry what's happening from headline data, our overall macro, which still shows Chinese growth, inflation, and a fairly accommodative People's Bank of China, but there's a big slowdown in China. We could see it in the equities markets. We're seeing it in the data, so it's tough to say crude should benefit from that. We do have a slowdown in the U.S. Look at the growth, GDP, look at the inflation. The only thing that we've got is still a fairly hawkish, for now, on paper, hawkish FOMC that should be shifting to, you know, neutral and eventually to dovish. But this is not going to fare well for crude. Now, the question I get is, are we going to see lower lows? Right now, I don't see that, but I won't be surprised if we continue to make a 50% retracement. In other words, just cut this current range in half and let's see where we would end up, and that's going to be somewhere around the 47.80 area, and that is going to be a downside target. So what does crude say about the larger economic picture? Not much. Not the optimism that the U.S. markets are having. They're really reflecting what is known, what the data is, and it's irrefutable. The way we translate that data into what kind of economic stage each economy is in obviously can shift, but I don't think anyone would argue there's a significant slowdown in Europe and China. And even the optimism over a dovish FOMC cannot override what's happening globally, and even, quite frankly, still a lot of supply out there despite the supply cuts from OPEC and OPEC plus. So yes, we're a bear in crude. Nice movement to the downside, 47.80 target, and I'll see you in the next update.